Well, we're not going to bury the lead this morning. It, in fact, appears that Tesla is taking another run at the 260 level. We'll see what happens. Choppy this morning, but generally up. Momentum is good. Maybe yes, maybe no. We'll talk more about that in a minute. And of course, we'll check the number at the end of the show. We've got CERN Basher this morning reporting on a conversation between Peter Diamandis and Cathie Wood. Tesla is the unsung hero of the decade ahead. Peter says, in the next 10 years, we are going to see as much progress as we've seen in the past century. Cathie says the equity markets mosey along like nothing much is going to change. These technologies are falling so dramatically in cost, they're going to scale more dramatically than most people think. I don't think people understand how quickly this is going to happen. She goes on to say that Tesla is the poster child. It's a robot company. It's an energy storage company. It's an AI company. It's a software as a service company. And you have auto analysts who are the ones who are following it. Peter, I asked a friend, what's it going to be like when there's a humanoid robot walking down the street? His response was normal. Peter goes on, he says, on Figure AI, we've all seen Figure 1, I've seen Figure 2, and plans for Figure 3. The speed of innovation there is amazing. And then he says, Tesla is the unsung hero of the decade ahead. Well, that's a pretty good way to start the morning. Gary Black has this from China. He says China reported 6,500 insurance registrations for the first week of July. And of course, that is a very strong week for the first week where most of the cars are going to be exported. He says, given Tesla's overall second quarter volume beat and Tesla's China relative modest registrations in the second quarter, the first week of the second quarter, Tesla China may have held back some deliveries last week to get third quarter off to a strong start. He also has this. He says, look, hedge funds still short Tesla. Here's why that's a really dumb idea. By the way, Gary is moving back into the bull camp. You'll see. Okay. So Tesla EPS, earnings per share revisions, trend likely turning positive after 18 months of declines. Number one was EV adoption growing at 20 to 25% year over year. That's general EV or BEV, I'm sure is what he means. Number 3, EPS could grow 30% year over year in full year 25 after falling 24% in 23 and negative 23 year over year, maybe for the total for this year. I think the total for this year will be much better than what he's expecting. Number 4, Tesla appears to be favoring use of very low interest rate loans instead of price cuts to drive volume, a strategy that Gary says he's been advocating for 18 months. Definitely, I agree with him. I advocated for it in the book, The Elon Musk Mission, which was 20 months ago. Maybe Gary got it from the book. 5, higher FSD take rates, licensing deal likely in FSD, approaching 99.9% efficiency. So higher take rates as well as some kind of a deal likely soon. And he's been, of course, talking about that for a very long time. Number 6, Tesla 25 to 30,000 compact, the $25,000 to $35,000 car compact launch in full year 25 will dramatically expand the Tesla TAM. Number 7, Tesla should beat 2023 third quarter delivery estimates of 435,000. That would certainly be true. Number 8, energy profits could 10 times by 2030. Oh yeah, easily. Number 9, isn't he ever going to mention Juniper? Holy mackerel. Number 9, Tesla likely first to market with an unsupervised generalized robotaxi. Number 10, Tesla likely to start breaking out FSD AI as a separate business line in the financial statement to paint a path for investors to AI monetization. Number 11, Fed will start cutting rates in 2024. Maybe, but certainly in 2025, I would say, and that's going to help them. And in multiple ways, as we've talked about before. Number 12, Optimus production begins full year 26, which could be a $20 trillion TAM opportunity. Gary? Oh, Gary, what? Oh, all of a sudden he's talking about Optimus. Well, there you go. Maybe the street will start to get it. All right, this is from AJ this morning. He says, China's internal combustion engine sales are collapsing. ICE vehicles market share is about to drop below 50% in China. ICE market share almost halved in 5 years. And then he goes on to say that trading in Tesla has jumped to a 1-year high. We're talking about volume. Over the last 5 trading days, the total dollar amount traded reached $192 billion. This was last exceeded at the end of July 2023, about a year ago. Given robust trading volumes at the $250 level over the 2 days suggests this was not driven by a mere short squeeze, as many headlines and popular X accounts suggest. The significant volume traded at around the 250 share is suggesting it's a broad-based support. And this morning, we're continuing to see that broad-based support. Oh, well, this is more from AJ. He goes on to say, tariffs on imports from China start to bite. As a result, Tesla was forced to increase prices on the Model 3, which of course is made in Shanghai. You can see how this is driving a fairly narrow price gap between the Model Y and the Model 3. So the rear-wheel drive Model Y is 2,500 euros rather, versus the only 2,500 pounds higher than the M3. The long range is only 3,500 pounds higher, and the performance is only 1,500 pounds higher. I'm sorry, euros. All those are euros. This is from Tesla fan MTL, which is also James Cat. I would imagine that the 1.5 thousand euro price increase on Model 3 is in response to EU tariff, and it may not cover the entire amount of the tariff increase. So Tesla is maybe absorbing some of that cost to keep prices down. Brad Ferguson says this morning, Brad S. Ferguson, if you want to find him on X, he says, buried deep in the replies, this robotaxi nugget, James Dalma estimates the cost of a $1.21 per operating mile for Waymo and only 28 cents for Tesla. The single biggest difference is depreciation for Waymo, which is 70 cents versus 4 cents for Tesla. So there's your big difference. I've been kind of planning to do some analysis on this because we know that each vehicle that Waymo puts on the ground is 5 times, 6 times more expensive than the robotaxis will be in the future. All right, this is Randy Kirk. By the way, hit like, hit subscribe, hit notify this morning. You got more Brian White coming up this morning unless breaking news gets in the way. And then you've also got, of course, Nicholas Gibbs on Tuesday night. Thank you so much for all the folks that have been contributing to Patreon recently. Nice increases, and I could use a lot more if I'm going to get above $30 an hour. As you know, should someone of my age still be willing to work for $30 an hour? Anyway, if you could help out, it'd be great. $3, $5, $10, it doesn't take much to make a contribution. Okay, the NFIB, we know how much I like the National Federation of Independent Small Business Optimism Index. It reached the highest reading of the year at 91.5. Oh, don't get excited. Don't get too excited. This is a 1-point increase from last month, which was 90.5. The last time the index was higher was in December of 2023 when it reached 91.9. Even so, this marks the 30th month below the historical average of 98. Inflation is still the top small business issue, with 21% of the owners reporting it as their single most important problem in operating their business, down 1 point from May. So last month was 22%, now 21% saying inflation continues to be their number one problem. Main Street remains pessimistic about the economy for the balance of the year. Now remember, this is 40%. Well, the small businesses in this particular report may not represent 40% of the economy, but if you count that and you add the Russell, I'm pretty sure we're going to get to 40%. According to NFIB chief economist Bill Dunkelberg, increasing compensation costs has led to higher prices all around. Meanwhile, no relief from inflation is in sight for small business owners as they prepare for the uncertain months ahead. They're having to increase pay to their employees, which is fine unless you can't pass it along in your prices. Key findings include seasonally adjusted and net 22 plan to raise compensation in the next 3 months. That's up 4 points from May. A net negative 2%, seasonally adjusted, of owners viewed current inventory stocks as too low in June. So they need more inventory. They're digging into inventory in order to raise cash. A net negative 2% seasonally adjusted planned inventory investment in the coming months. That's up 4% from May. So they're seeing a path to increasing their inventories. 52% report capital outlays in the last 6 months, down 6 points from May, and the lowest reading since August 2022. Now, this includes things like cars and interior design, interior improvements or whatever. They actually don't break out, believe it or not, they don't break out how much of this is going for computer improvements and such. 4% of owners reported that all their borrowing needs were not satisfied. Only 4%, but that's up 1% from May, and it's the highest reading since August 2022. I've been reporting on this for a while that I find it interesting that these owners now, I think, are much older. It's a much older cadre of people than when I was starting out, when like every small business owner was owned by somebody in their 20s and 30s, and we were taking over the world. But anyway, now we're still the owners of those small businesses, and we don't need to borrow because we're covered. As reported in NFIB's monthly jobs report, a seasonally adjusted 37% of all small business owners reported job openings that they could not fill. There's still over a third cannot fill, but that's down 5 points from May. Of the 60% of owners hiring or trying to hire in June, 85 reported few or no qualified applicants for the positions they were trying to fill. And this is particularly a problem with retail and housing, construction, those kind of areas, usually low cost, and in some cases, like construction, maybe high skilled, are people that just don't want to do those kind of jobs. 52% of owners reported capital outlays in the last 6 months, but that's down 6 points. 4% of owners reported that all their borrowing needs were not satisfied. 24% reported all credit needs met. 61% said they were not interested in a loan. And that 7% reported their last loan was harder to get than in previous attempts. That's an important piece of information. All right, this morning, the Wall Street Journal is reporting that Federal Reserve Chairman Jerome Powell is set to kick off his semi-annual address to Congress, which has actually started. Wall Street will listen closely for any clues on what the central bank maybe they're going to start cutting rates. Powell's testimony to the Senate Banking Committee will start this morning. He'll repeat the exercise Wednesday in front of the House Financial Services Committee. Breaking news, Powell says that holding interest rates higher for too long could jeopardize economic growth. Then he goes on to say that, of course, they don't want to undo all the work they've done by lowering the rates too soon. Well, tomorrow's the CPI, and while it's always easy to headline this next release as being the most important since, fill in the blank, a good print for a second month in a row, combined with the poor employment numbers, could cause my no cuts this year to go up in smoke. On balance, I think the Fed will wait for the PCE at the end of this month and one more employment report at the beginning of next month, and then depending on those results, could do a rate cut even between the July and September meetings. They may not wait. If it's bad enough, if we go to, say, 4.3% and inflation is good on this upcoming report, maybe they wait for the CPI in August, but they might make a cut in August even before they get to September. Not likely. That's not my most likely scenario. Most likely scenario for me continues to be they do not cut before the elections, and the first cut, if there is any this year, will be in November, and then maybe skip a month and go to January. Those are some of the possibilities is how I see it. All right, so what are we talking about? Yesterday was a fantastic video with Brian White. You need to see it. I'm putting the card up here if you want to go back and check that out. And later on today, as usual, we will do another video with Brian White. So hit notify so that you can make sure that you get notified about that. Of course, in order to hit notify, you have to hit subscribe. I would really love to have, if you haven't subscribed yet, I just don't understand why. It really helps the channel, especially if you're somebody who comes back to the channel often. You don't have to go to your subscription list and click in there. It doesn't matter. You can just hit subscribe, And then that helps me. Now, if you don't hardly ever watch, it doesn't help. But if you watch frequently, it helps. Okay, that's what we're looking at right now. Let's go ahead and take a look at, I got out of order, didn't I? Yes, I got confused. I got befuddled. The Tesla stock right now is up $2.71. And that is with the entire Mag 7, pretty much except Microsoft is agreeing with Tesla this morning. Upward trajectory with the NASDAQ up 51.88. We've got the Dow Jones down, however, 157.58, S&P up 6. And the Cathie Woods are a mixed bag this morning. As usual, though, very narrowly, nothing up or down over $1. We have got, again, Tesla up 296, which is exactly 1.17%. The Dow is down 0.42%, NASDAQ up 0.25%, and the S&P up 0.10. What a divergence in the way that the three indexes are working this morning. Anyway, but Tesla is back on an upward trend, 256.17, 4 points away from 260. Will we break through? Now, by the way, there's a range, 260 to 265, based on some of the technical analysis that I've done, which I'm not a very good technical analyst, and based on some of the people that I'm reading, there's a 260 to 265 kind of maybe another hit, another barrier at 265. So breaking through 265, there's a 304, 300, 304. Last time we went to 299.22 when I estimated it would get to 300. I know I missed by 78 cents, but it was exactly the right day. That's pretty good. All right. So anyway, whatever the case may be, looks to me like we will probably make an assault on the 260 level, if not today, tomorrow, but probably today. Based on the current mojo, for me, looks like it's definitely headed that way. All right, let's go ahead and take a look at what's happening with those bonds. Right now, we have got the 10-year, no response really to Chairman Powell's conversation yet. It was about at this level the first time I looked this morning. We're up 3.7% on the 10-year at 4.305. We were up 2.3%, did I say percent? 2.3 basis points compared to 3.7 basis points on the 2-year, and the difference is still right around that 33 basis point level that I've been mentioning, which is, I'm looking for it to break below that as real evidence of the recession that it's been predicting for 2 years. All right, and then the 2-month is actually down 1.9 basis points this morning at 5.366, which is 100. It's just a little bit less, actually. And that inversion is collapsing just a tiny bit. All right, let's go over to the oil patch. We've got the oils down 34 and 42 on Texas and Brent, 82 and 85, right in the middle of the range. Natural gas, everything just changed on me here. Natural gas up 1.39% at $2.40. That's pretty darn close to the middle of its range as well. Gold up $4.30. Now, this is a little higher in its range at 2,367. You know, my 2,333 is what I call the middle. Silver up 0.69 at 31.12, staying well above that $30 level, and copper down a bit, 0.25% at 460. You've got the Bitcoin this morning up $1,223. My $10 is secure at 57,582. And you've got the dollar inching up, it says this morning in the headline. That's it. That's all we got, except I do like, as usual, to go back and check one last time on Tesla. Well, that mojo's gone away for a minute. It's at 246 up now. So we are up and down, right around that 255 level, 256 level for the last little bit. We'll see what happens. I will report, of course, with Nicholas Gibbs tonight when we do Good News Friday. Now, I could imagine a breaking news story today if we break through 265. If we break through 265, hit 265 or higher, Yeah, I might have to interrupt Brian White's video for today and do that instead. So you watch for that. You watch for that headline. All right, that's all I got for you. It's been great talking to you.